So coming back to explaining this, what again I was expecting to happen, or what I'm forecasting, I should clarify, is this swing. And during this swing, candle 1 poses a low, candle 2 poses a lower low, and candle 3 is going to pose a higher low. So if I hide this fib right quick, this right here, as I saw, is a buyer's maker model because we're in a buyer's market. So how I thought this up was that so this was the sell model where price consolidated, had a fake out to draw liquidity, came up to a higher high, and this is where profits were taken until price moved down. Here was another entry you could come in until price further consolidated back in this zone below the previous consolidation. And so since I think price is going to rally from this range, price did here after breaking the range. So if you watching the previous videos, Raheem, you saw that this is where you initially took a trade and again lost profit because it eventually hit your stop loss on this candle, and you didn't even take partial profits because you were naive enough to think that price doesn't always retrace and double tap or sometimes triple tap before making its move. So always take your profit off the first initial reaction and don't wait in lumberland to eventually lose money. That was a side note for you. But as price came to the bottom of the zone and then made another low, it rallied up. And so again, using Mr. Huddleston's teachings, taking the fib from the low of the day body wise to the high of the day, price retraced all the way to the 79% retracement level, trade a little bit below that. And why is that, you may ask? When price was moving down to gain this liquidity to push back up, price first had a swing down, which was the fib that I had up here on top. And so with that fib, I took the high of the day and took it to the lowest close again on the bodies because this is a higher time frame. So the lowest close would be this 428. I'm sorry, this would be the open. Oh no, what is the close on this? 428. Okay, there we go. So using a price from this high to this swing low, I was able to get another optimal trading entry. With this one would be, a scalp, because again I am anticipating the bigger move to go further bullish. Forecasting, not anticipating. I don't know. And I got an optimal trading entry here. I thankfully um took this whole candle in profit at 2 a.m. in the morning, and believe it or not, I got out um here. Actually, I took everything off the trade because it passed the 79% retracement level, even though I should have. I did take a portion off here at this level. Matter of fact, I'll take this off so that it may be easier to see. So when price did, make its initial move down, I did take a portion off the scalp here. And again, I wasn't expecting it to get all the way to the half standard deviation, because the half standard deviation was below the 79% retracement level. But as you can see, price did trade a little bit below that, maybe to purge some um, liquidity. And so even on this smaller time frame, I'm expecting, yes, another swing. So I'm expecting the next candle to have a higher low than this candle. It doesn't necessarily have to trade through the high of this candle, but I don't want it to trade lower than this candle. And stop loss is beneath the zone, about right here. And I'm going to go to bed and wake up and see what happened. So just wanted to break that down to you, Raheem, and to everyone else who's watching. I know that some of the videos that I made, that I posted already, these days have gone by. But again, these videos are for personal reflection and for me to learn from myself. But if I'm able to help anyone who chooses to watch this, then you're welcome. Till next time, peace.